Alright guys, so this video is to talk about the indicator and to show you how it should be used and how it works so you can maximize the profits and the trades off of it. So first of all, the indicator has been, the strategy has been in development, you could say, for over 3 years. We have been trading it even before we started working with investors and automating. And the issue with the strategy was that while it's pretty simple, the learning curve was pretty high, and I could not put into words why really that was the case. And I think at the end of the day, it was the fact that there's a lot of thinking power required in order to see the patterns in the market. But really what it is we're looking at stochastics across multiple time frames, and when there's alignments, then we trade them. So until now, we really had to talk and teach this to people over a period of multiple weeks or months, whereas now with the indicator you can get pretty far without having to learn it on by spending 40 hours on it. So it's a good start, right? That does not mean that we should not learn and understand it further, but this is a good start for beginners. That's number one. Number two, while this strategy or this indicator will show you good entries, it is still very, very, very important to understand risk management and learn risk management and risk manage the right way. Because if you don't, then that goes back to the theories and to the underlying knowledge that we've been covering so often in the Discord. If you do not have the risk management skills, then it does not matter what signals or what entries you're using, you will still lose money, because you will mismanage your trades, and you will mismanage your trades by default, because that's how the market is designed to prompt you, to trigger you to do that. So that's that. Now, how the indicator works. Right now I have a couple different settings on the indicators also to show you, but we have our live signals going into the Discord from here as well. And really what this is we have the green and red lines or histogram, and what this does is it shows us the strength in the market, right? And really what it shows us is the score of, it estimates or looks at the stochastics, the positions of the stochastics, and then tells us overall over multiple time frames how does the market look. So whereas before, if you've been around, we would just click around all different time frames and see what the stochastic levels are, and based on that we would then get an overview of the market and trade based on that. Whereas now we just have it right away in front of us. So how this works is that and you can see pretty well how spikes in these numbers trigger reversals, and that's essentially what we're trading. So and then there's thresholds that depends on how aggressive you want to go, how conservative you want to go, and what coin or what pair you're trading. So that is something that when you trade it yourself, you can adjust it to the level that you would like to, right? The standard is 2 and -2, and I'll explain what that means. And then our signals are on a more conservative side, because those are automated signals. That's something that you shouldn't have to think about that much. So pretty simply how this works is that whenever we have a high score in our stochastic score, right, in our stochastic calculation, and it starts going the other way, that's when we enter, right? So that's the case here, that's the case here, that's the case here, right? Right now we're in a very nice Solana short. Solana has been doing really well, and If we would put the threshold a bit lower, then it would trigger a signal here as well. So this is a signal, and pretty good signal, that we did not catch on our automatic side. But if we would trade this ourselves, or if you yourself would lower the threshold of the stochastic right here, the level 1 is the upper, level 2 is the lower. If you would lower this to maybe a 1.5 or a 1 even, just to show you, then you would see that it triggered that level. 0.5, whatever it is. Well, it would trigger that level, right? So that's the point, and that is what this indicator is doing. So whenever there's a high value or low value in the indicator, and the line that tracks the direction goes red, that's when we trade. And the signals, which are these purple lines and blue lines here, those trigger automatically when that happens, when that signal happens over the threshold that we set. The threshold here is at 2, which is what we set right here. If that happens over the threshold, meaning that there are higher probability trades, it triggers that trade. And it sends a signal, and that's what you will see in the Discord when you have the membership as well. If you want to trade it yourself, then it's going to be, you don't have to look at the threshold, but you can just look at how high or low these values are, and depending on that, trade that, right? So that's number one. That's a little bit of an explanation on how this strategy works. If you want a more in-depth guide on how the stochastics work and what the stochastic strategy is in the first place, there's videos or live calls that we've been doing where we've been live trading the strategy and went over many trades, where we actually go into the manual trading of the strategy, which you can look at and watch and learn, which would benefit you a lot. And so those videos are on YouTube, and I will send you the links as well, so you can watch those. So we don't have to go into the absolute detail of the strategy, because it does take, to understand it, it does take like an hour or two probably to get like some basic understanding. So I will spare you that right now, because what you got is the indicator, and what you want is simplicity. So that's this indicator, and I would highly encourage you to trade it yourself, or at least look at the indicator on TradingView yourself and see and observe how these scores work with the price reversals. And that's what we trade. We trade tops and bottoms, right? That's what we do. So that's number one. Number two is, how do we set up our trade? So we get a signal, right? How do we set up a trade? Well, the way we set up the trade is by, first of all, understanding what strategy is. The strategy is a trend reversal strategy, meaning that we're betting on the fact that the strategy, or that the price, will turn around from where it is right now. This usually happens in ranges. So whenever the price is ranging, that's when this strategy will excel the most. When it will not excel, and when there's human intervention required, when a strategy does not work, is when it's a high trending market. And if there's a high trending market, essentially what happens is that the stochastic tops out and stays at the top because it has nowhere else to go, but the price keeps going higher and higher. And in that situation, we might trigger shorts. If the price is going higher and higher, we might trigger shorts, which would not be correct shorts. And how do we see that? Well, in the Discord, we'll tell you when not to trade it. And then if you look at higher time frames as well, then you will see that there's going to be a strong move to the upside, which invalidates our range trading. We like to trade it during ranges. And here's the deal. When you trade the strategy the right way, it has very small downside, very large upside, and a very high win rate, right? That's what's important. So we just got a signal here, by the way. So, and that's what's important. but you need to trade correctly. So when we enter, right, when we have a signal and we enter, then it usually should be at the top or bottom of a range. When we're longing, it's at the bottom of the range. What does that mean? Well, what that means is that we right away, by default, we're expected to bounce off a range. Just by default, it will happen more often than not. So the way we set up a trade, this goes back again into our risk management periods, like the calls. And rather than me explaining all of this all over again, just watch this 1-hour video, and I promise you, you'll be trading better than 99% of traders, because you will understand risk management. But essentially what this means is that when we enter, our stop loss is the invalidation of our trade. Invalidation in our trend reversal strategy means if the price continues in a trend. So whenever the price goes lower than the bottom of the range, which in this case, getting the signal here would be around here, right? So we just put the stop loss below the bottom of the range, and our take profit we put to the top of the range, which was in this case here. And then as we as we manage it, when we see the score is not being topped out yet, we can increase those take profits. But really what it is stop loss at the bottom of the range, and we're assuming that we enter towards the bottom of the range. That's the beauty of it. And then the take profit is at the top of the range. And when you want to trade it safe, you can have one more take profit at the middle of the range, because that's more likely to happen than hitting the top of the range. So this is very important that we set up trades that look like this, right? When you look at the risk to reward ratio, it's a 3.94. Here I did not set my take profits, but really it should be here. This is an 11, right? Because the stop loss is so incredibly like this. The stop loss is so incredibly tight, and we can do that because we understand the strategy and we understand when we enter. And this is very important, because if for some reason the strategy would not be correct and we would lose, then we lose, in this case, 0.8% with that leverage. But if we win, we gain 6%. Right? So even if the strategy was 50-50, but we set up our trades correctly with a tight stop loss, and reasonably tight stop loss, not just smacking it down and get stopped out every day, every time, every trade, a tight stop loss, that makes sense. That's at the invalidation, and we have the right entry. Then we have a long way to go for our take profits. And because of that, even if the even if the strategy was 50-50, only right 50% of the time, we would make considerable profits. But it's not. It's actually right way more often. So that's the beauty of the strategy, and that's why it works well. Really, it's just those three numbers. It has a low downside, high upside, and high win rate. And getting this, into actual code was definitely a challenge. But right now we're at a place where we're confident of showing this and have other people trade this, and the indicator behaving the way we want to. So that's that. That was just a quick video, but again, very, very important to understand the risk management. I cannot stress this enough. Just trading the strategy without thought behind it will not work, because you need to understand what you're doing while trading, because you are the person executing the trades, and you are the person with responsibility of your money that you're trading. Meaning that you need a certain level of knowledge in order to be able to do the right decisions at stressful times, and also not to be prone to be triggered to do emotional decisions, which is something that the market is trying for you to do constantly. So those are the main takeaways from this video. And please, I highly, highly encourage you to watch the risk management video and the strategy management video, And after those, I promise you, you will have a much easier time trading, and you will get the most out of the strategy, and you will get much closer and much quicker to the goal where you want to go. So that's all from my side. If you have any questions, I'm here. The team is here. Just ask in the Discord. We're here to help you. We're here to, push you and educate you. All of that is we're here to help and give you value. So that's all. That's all from my side right now. Watch those videos, play around with the indicator, get comfortable with it before you start actively trading it. And, we'll be trading it in the Discord as well, of course. And yep, that is it. And I'll see you in the Discord.